Yeah, the question I wanted to ask you, I've been an investor for many years and done very well following a similar sort of style to yourself. So thank you for that. The big question I have is...
Would you want to quantify that? In terms, I mean, you can always send us a check.
Well, if there's a deal to be had, maybe we can speak afterwards.
Okay.
So most people know me because of my work within sports betting and BetAngel and all of those things, but I have had a successful investing career alongside that as well. And once a year when we come to May, the two of them combine because we get the Guineas in Newmarket. We also get the Berkshire Hathaway AGM in Omaha, Nebraska. And one year I took the opportunity to combine both of those interests while I was over in Omaha, Nebraska by asking Warren Buffett a question. And what I wanted to do in this video was explain the reasoning behind asking that question and the response that Warren Buffett gave. So I'm sure you know who Warren Buffett is, chairman of Berkshire Hathaway. It was a small textile mill that he acquired in the late 60s, and he basically built it into one of the biggest companies in the world, and therefore has become one of the richest men in the world. And fortunately, I am a Berkshire Hathaway shareholder. One of the things that has been consistent throughout my career, I've had many different jobs and different roles in different industries, but I've always wanted to be able to be financially independent, and I felt that investing was one of the ways that I would achieve that. So when I first heard about Berkshire Hathaway and Warren Buffett many years before people really began to understand exactly what was going on there, I bought some Berkshire Hathaway stock. And that allowed me to be able to go to Omaha, Nebraska every year, and to be able to meet Buffett, and to be able to ask questions directly to him. And as a special privilege for international shareholders, we would get to meet him after the main AGM as well. Now, when I left my normal career, I continued to invest and trade on financial markets because that was one of the things that was key for me. But I also did write for magazines, and one of them was Shares magazine, where I had a weekly column for a number of years. But as my sports betting and Betfair trading stuff started to really gain momentum, I obviously then had to start to work on both almost simultaneously. But one thing really resonated with me, and that was how similar sports betting was to insurance markets. And predominantly, you know, a large chunk of business that Berkshire Hathaway and Buffett owns and that they're well renowned for is the insurance business. But fundamentally speaking, the two looked fairly similar to me. So when I went to the Berkshire Hathaway AGM one year, I just had to ask Buffett a question about the differences or the similarities between sports betting and the insurance industry.
Number 6.
Hi, it's Peter Webb here from London, UK. Your views on gambling are well known, and I think most people would agree that gambling is for the fiscally challenged. But when I look at the insurance industry, I see an industry that's based upon probabilities and people not knowing those true probabilities, and money being made for the house in the same way as you see in a gambling market. So the question that I have for you is, how do you reconcile your views with gambling versus the insurance industry? And is the insurance industry for the fiscally challenged?
Yeah, well, gambling, I think the distinction that usually is made is that gambling involves creating risks that don't need to be created. I mean, if you want to go out and gamble on where a little ball is going to fall on a wheel that's revolving, that is not something that is a created risk. Whereas if you've got a home or a business, you know, on a coastal area, the risk is there. It wasn't created intentionally. I mean, you can say you build in that place, and then the question is who bears it. So there's a transfer of, in the case of cat coverage, large existing risks as opposed to the creation of a risk that is not required. I mean, you can watch a football game without betting on it, but you can't live in a house, you know, on a Florida coast without having a risk that your entire investment disappears. So that's the distinction, basically. I hope you're right that the house wins in both cases. And Charlie?
Well, I don't think I can add to that either. The whole concept of the house advantage is a very interesting one in modern commerce. A lot of the investment management operations, which were not ordinarily spoken of in the past in croupier terms, but the terms of a lot of private equity investment now, I think the proprietors of the partnerships are taking a house edge that looks a lot like the rake of the croupier in Monte Carlo, except it's bigger.
Is there anyone we've forgotten to insult? I'll make sure we don't miss anyone here.
So there you have it. That's the question that I asked Buffett. That was the answer that he gave me. And I think ultimately that's a fair enough answer. You sort of would expect something along that line, because what he was basically saying is that insurance companies mitigate risk and gambling companies manufacture it in order for you to offset it. But they are joined at the hip in terms of the way that they make money, because say that we had a tennis match taking place. There are only two players in a tennis match. One of them will win. There's a 100% chance of that. But if you go to most bookmakers, they'll offer you 10 to 11 on either of those players going on to win that particular match. And effectively what they're doing is, imagine a big pie that represents that tennis match. On one side of the pie, if both players are equally matched, you have the chances, the odds of player one winning. On the other side, you have the chances of player two winning. And what the bookmaker does, he just takes a slice out of that pie to keep for himself. So his maximum payout back to you is always going to be smaller than the amount of money that you put in. And that is exactly the same way that insurance companies work. They ask for a premium, they take that premium off of you, and then ultimately they will pay out, but it will always be less than the actual risk in itself. And that's why I wanted to sort of put these two things together, because ultimately they're both managing risk of some sort. And ultimately both of them will take a cut of the premium that they receive, and that's how they make money overall. I think the point about creating risk is valid when you look at certain things. When you look at casinos, bingo and stuff like that, I think that obviously is manufacturing risk for nothing. But I think when you look at sports betting, there's an element of mitigating emotion in there to a certain extent, but still they are creating markets around things like that. But betting exchanges have, significantly reduced the amount of money, the amount of slippage that goes to the other side of the book. So, it's not as bad as you would have seen in the old days. But when you look at betting exchanges and, the thin margins that they operate on because you're betting against somebody else, wouldn't it be great if they could do that in the insurance industry? Because ultimately then you would pay much, much lower premiums. However, there is a big difference between these two industries. And that is that when you look at a sports bet, you deposit money into your account and then you place a bet from there. And then the turnaround on that money is actually quite short. You tend to place bets and then get the money returned into your account or not, as the case may be. And then you have to continue to deposit to keep that going. The betting company has a large client fund account because of that, because people hold balances with betting companies. Those betting companies tend to have a large balance on their balance sheet. However, it's segregated as client funds. They can invest it in deposit accounts, but they can't actually put it elsewhere. They can't do anything. They can't speculate with it, is basically what I'm trying to say here. But when you pay a premium to an insurance company, it's very likely that it will be a long odds shot. So you are mitigating extreme odds, and so the premiums don't tend to be absurd, although that may be open for discussion. But basically, because the payoff will be in maybe years' time, or much, much longer time periods than you have with a traditional bet, what the insurance company does is they take that money and they do invest and speculate with that money. That's part of the insurance business. And that is why you'll probably never get a betting exchange for sports, for sports, what am I talking about? A betting exchange for insurance markets, because it's not the same as the sports market in terms of the payoff and other factors around it. Because if you look at Warren Buffett and Berkshire Hathaway, a lot of the early money that they made was by buying insurance companies that had large floats and then investing those floats into other positions, whether they be stock market positions, buying other companies and so on. That allowed them to grow and get this astronomical growth. There are other factors as well, I'm summarizing here, But fundamentally, that was one of the ways that Berkshire Hathaway has gone from something very, very small to something absolutely huge. They've been able to use the float in insurance businesses to be able to invest and speculate. They effectively have been given free investment money, and it would be hard not to do a good job of that if you were given the same situation as well. So yeah, there are fundamental differences between the two, but there are similarities in terms of the way that the markets are priced and the way that the house gets an edge over you. So yeah, I hope I've explained that in this video. Warren Buffett is often misquoted. So I've seen his quotes appear on gambling articles, on many different things, and that's because some of them are absolute gems in terms of what he says, but they're really applicable to his knowledge of business and investing. Very often they're not applicable to betting, and I hope that one of the things I've done in this video has shown you his views on betting and why some of those quotes absolutely do not fit into this particular market. But yeah, that was the question I asked Buffett a few years ago. That was his response, and I hope that this video has been informative for you.